Welcome to Real Vision. I'm Ash Bennington. I'm joined by two of our regular contributors to our pro crypto tier, Jamie Coutts, former Bloomberg intelligence analyst, and Petr Pinkhasov, founder of InvestorCharts.net. Welcome, gentlemen.
Hello.
Hey, Ash.
Great. Listen, great to be here with you guys. You guys are two regulars on Real Vision Pro Crypto. They let us out. We've escaped the firewall. We're out in the wild here doing this on YouTube. Let's talk a little bit about who you guys are and what you do for an audience that may be seeing you for the first time around the world. Petr, first to you.
Yeah, my name is Petr Pinkhasov. I'm based out of Boston, Massachusetts. I've been in the hedge fund prop trading industry for a while. And I'm a regular contributor to Real Vision, specifically focused on the technical side and more specifically on the DeMark indicators, which we'll get into a little bit later.
Perfect. Jamie, by the way, I understand, Jamie, you have a little bit of news today.
Yeah, that's right. So I'm joining Real Vision as the chief crypto analyst. So it's been an exciting ride for the last couple of months working with the firm, and I'm very happy to join it on a full-time basis. So there'll be more research and more analysis from me in the next couple of months.
Yeah, for people who don't know, talk a little bit about what that means. You write very detailed reports on the crypto space. You and I run through them on Real Vision Pro Crypto, some of my favorite content, because we really go deep in the weeds and give folks a kind of detailed data-driven analysis that they're probably not seeing anywhere else.
Yeah, so I mean, I've been in the markets now for over 20 years and focused primarily on equities, but sort of got into the crypto space a couple of years back and built a product at Bloomberg Intelligence. And the idea really there was to start actually creating content or creating analysis that would, I guess, bridge the divide between, at that point, a very retail-driven market and the institutional investor community. And that was really through the development of sort of valuation models for crypto assets. Which is kind of a strange one because I wasn't really a fundamentally driven analyst or trader beforehand. I myself, like Peter, come from a mainly technical analysis background, which I've applied for over the years, and that's still a very big part of the process. So what you'll see at Real Vision are some very detailed reports, which are really a synthesis between the technicals and also the fundamentals. And I think it's important, as much as we all sort of trade this asset class based on momentum, that we actually understand that blockchains are solving real world issues, that users are expanding and understanding the metrics or the KPIs which define success in that asset class or in this asset class. So you'll see a lot more of that kind of stuff. But yeah, there's definitely a bit for everyone, and whether you've got sort of a macro lens, a technical lens, or a fundamental lens.
Yeah. Very well said. By the way, as you may have guessed from the accent, Jamie's coming to us from Australia, 10,000 miles away. We can do amazing things at Real Vision with technology. We have not figured out how to move information faster than the speed of light. So if you see a little bit of a delay or a lag, Jamie is literally 10,000 miles away. So that would account for that. By the way, I should say all this week at Real Vision, while we're talking about Real Vision, while we're talking about research, we're focusing on the importance of research. And there's no better place to expand your knowledge, of course, than at Real Vision and the Real Vision Marketplace. This is where you can access the research of some of your favorite contributors. Petr, of course, is there too. You can head over to realvision.com/Petr. That's PETR, realvision.com/PETR to sign up to his premium service with a 20% discount. Okay, with that said, before we talk about the approach to research, the research that you guys are actually producing, we're going to talk a lot about that here. We got to talk about the elephant in the room right now, which is the price action in crypto. 61,365 Bitcoin right now on my screen. ETH looks like, trailing. You look at these numbers, man. It's just really quite one hell of a time. ETH up to 3,350, I think slightly off its highs, but still moving. Petr, what do you think about these markets? How do you characterize them? What's your big picture take for where we are right now?
I think if I had to summarize it in one word after everything that happened in 2022, I think it's relieved. I think the rest of the market is very much focused back on how I define value. I think is the old John Law sort of philosophy of scarcity, right? Why is water so cheap and diamonds so expensive? Well, it's because it's hard to get. And I think crypto, specifically Bitcoin, has that scarcity element. And I think it's been proven as a method of exchange that, we can talk about the philosophical nature of all this, but The fact that we're almost, if I pull up the weekly charts that I have up on my screen right now, we're almost back to all-time highs, right? 660. It was, I think we got close to 70K last time. And you can literally smell kind of the FOMO in the air at this point. So it's, you know, we've had a significant rally this year despite interest rates being as high as they've ever been. And I think someone like me, who's, you know, I'm not only technical, but I like to think about what kind of macro variables might impact something like crypto. And for 2022, I do think higher interest rates did impact technology and discounting growth rates. And even at, you know, core PCE up higher quite a lot today, and it looks like we might have another round of inflation. We're seeing a really, really strong move across the crypto space regardless. So to me, I feel like the crypto space has been vindicated. And as a long-term believer in crypto, it does feel very interesting. And a lot of my friends and you know, people who aren't very interested in crypto are coming around at this time. So it's exciting. It's, like I said, feels vindicated. And yeah, I mean, we can discuss the technicals in a little bit, but yeah.
By the way, so much to say with what you said there, this idea of relief in the market. I actually just wrapped Real Vision Daily Briefing today with Howard Lindzon from StockTwits, and obviously a long-term tech and venture and seed capital, I should say, investor. So interesting because one of the things that came up was, hey, look, we're in this environment now where we're no longer in the ZERP world. And crypto appears to still be working, and it does kind of feel like a validation, right? Because I think folks who had a macro background and a few gray hairs and maybe were a little bit crusty have said, "Hey, listen, we've seen bubbles last 10 years that were irrational. This is just a function of ZERP. It's a function of rates at the lower bound. It's a function of ultra accommodative monetary policy for many years, and now here we have this rising rate environment. We have an inflationary environment." And what you're seeing now is maybe the first rally, the first crypto rally of the new era, Peter.
Yeah, it's if you think about the last really great bubble that we had, I think it's hard to compare, you know, 1999, 2000. And if you look at how long it took for the market to come back to previous all-time highs, that was like 20-ish years. And you know, this whole exponential age, I think, is a very good definition of not only technologies evolving, but the hypercycle nature of information and the fact that we can recoup such, I would call, you know, 2021, 2022. It was, you know, there was a lot of institutional FOMO. Everybody was wanting to get into blockchain. You had a move from 10,000 to 70,000. It's hard to say that it wasn't, you know, kind of a short-term bubble. And the fact that we've come back to almost previous all-time highs so quickly, it does feel very validating. And I'm pretty excited to see what might happen this summer.
Yeah, certainly pretty damn close. We'll talk more about those charts in a second. I want to talk a little bit about DeMark indicators for folks who may not be familiar with them. But I saw Jamie was nodding there while you were talking, champing at the bit to get in. Jamie, jump in, pick up on some of those themes. Is this kind of the first crypto rally of a new regime, of a new era?
Yeah, you could say that. I mean, like this is the first bubble asset class that goes down 80% 3 or 4 times and then comes back up. I mean, I think you know, the term bubble's been used by those that have basically not done the work on the space, and of course we use it to sort of describe these frequent cycles that we see. But essentially, what we're looking at is a structural adoption of a technology which has a huge amount of volatility because everything's priced in real time. You've got real time discovery on a new asset class or a new technology. So you get these wild gyrations. But I mean, I was thinking back to really what happened over 2022 in that bear market. And when I ran the analysis looking at like volatility and risk adjusted returns, stacking all the major asset classes together and seeing, okay, which one actually underperformed on a risk adjusted basis. And you can measure that through, you know, a Sharpe ratio or a Sortino, which are the common measures that portfolio managers use to sort of benchmark themselves in terms of performance. What we found is that, you know, Bitcoin, unlike in the 2018 bear market, actually outperformed fixed income and various equity buckets as well. So it outperformed emerging markets. I think it may have outperformed a couple of the developing markets as well. So the nature of investing, the nature of financial markets is morphing, it's changing. And Bitcoin, whilst it has higher nominal volatility on a risk-adjusted return basis, not only has outperformed in the bull markets, it's starting to outperform in the bear markets. And that has massive implications for asset allocators when they run their models and look at what is the exposure they should have across all these different assets, because they look at the volatility and the risk adjusted returns as inputs into what is the weighting that they should apply to an asset class in a portfolio. And of course, we've got ETFs now that are now making the asset class accessible for a whole swathe of investors. And they're,
Right.
investment advisors, or down here in Australia, we call them financial planners. In the United States, it's RIAs. But whoever it is, they're now looking at the asset class through the lens of, okay, we've got a product to get access to it. And now we can just do, the sort of portfolio allocation, asset allocation sort of strategies, which we've become accustomed to, weight them accordingly. And now Bitcoin actually, instead of being, 0.1%, I'm just using sort of numbers on the top of my head because it depends on the risk profiles of the investors, instead of being a very small portion, actually makes sense as being a larger portion. So, you've got this, you've got the wave of new investors coming in, taking a position, but then you've also got the concept of actual, portfolio weighting actually potentially increasing from small amounts to more significant amounts. And then that starts to fan out into, the assets beyond Bitcoin and the rest of the space. So, obviously that's a very bullish, that has bullish implications for the entire space.
Guys, one of the things I want to talk about here, and obviously what we're talking about now is all in the context of the research that you guys provide. Let's talk a little bit about that. We talk a little bit about the specific products, but I'm also interested in hearing a little bit more broadly, particularly since we're going out to a broad YouTube audience here, for folks who are trying to understand what research is, maybe the difference between research and news. Let's talk a little bit about what research means to each one of you and why you're both so passionate about it. Peter, first over to you.
Yeah. Well, maybe before I just dive into that, I really wanted to piggyback on Jamie's point about portfolio allocation. It's very interesting because we're, for the first time in a very, very long time, we're in a period of rate normalization, and it appears that the economy is humming along and everything is okay. And the concept of risk parity is very interesting because technically it shouldn't be free, right? When you buy a bond, for the last since 1987, since that advent of that Fed put, you've been paid to get protection. You buy the bonds, you get the returns, and if the Fed cuts interest rates, you're golden, which shouldn't happen really in markets. You can't have free protection, but that's been the case, and it'll be very. By the way, interesting.
Not only has it been the case, it's been the case of probably the investing lifetime of most people who are watching this show. Right? I mean, the most durable macro chart right now in the space, accepting what's happened in terms of the rate normalization here post COVID, is that 10-year Treasury chart going from 1981 or whatever it is, just riding down to the zero bound. I mean, it is a huge durable trend, and you're essentially talking about, hey, this is a regime shift.
100%. So the idea that crypto is going to be an asset class that can protect you against some kind of devaluation of fiat, which it should. And the fact that if rate normalization means that, the Fed might be less likely to guarantee investors some kind of free risk return if anything goes wrong, that's just something to consider. And of course, that'll take time. And this is just something that I think about when we have these wild moves. So anyway, on to research and what it means to me. I think investing, trading, whatever you want to call it, speculation, it's a very intimate thing. No matter what research we get, at the end of the day, you can't have somebody tell you buy this, sell this, right? You're never going to survive. And it's for me, when I think about research, what I really like to do is present things as a framework. I like to think about what things matter at certain turns in certain trends, and try to provide some context of why it should or shouldn't continue to go further, why things might reverse, instead of just saying buy at this level, sell at this level. And again, it takes a lot of confidence and belief in an idea to actually put money behind it, and especially if we look at historically the best investors, the best traders, you only have a few good ideas a year, and that's when you really size things up and make things matter and make things count. it's very difficult to just kind of grind it out with static position sizing and just following some other person's buy and sell signals. I don't think that's really the way to do it. I think it's a very difficult thing to do. So for me, research, it's about presenting ideas, presenting interesting frameworks in order to not only execute, but just be ready to react in a way that's constructive for whatever environment that we might be in.
Well, Peter, you mentioned an interesting word there, which is this idea of framework. What does a framework mean to you? How do you present it in your research? And why do you think it's important for investors to view things through a framework?
I think like going through life, you have to have a framework. And I think going through life, you have to have a philosophy, things that you believe in, people that, you want around you. And I think that's the same thing about executing in markets. It has to be validated. It has to work. It has to make you happy. And it's the same thing with, P&L. You have to make it work for you. We're all different. Some of us are day traders, swing traders, long-term investors. You have to figure out who you are and what you really want to do. So when I think about portfolio construction or any of those things, that's kind of what I go into. And I try to present a framework that applies to not only somebody that might take an idea and day trade it, but somebody who's thinking about long-term implications of an idea and moving it from there. So yeah, what I try to do is basically that. Sorry, Ash, I kind of lost your question in my deep philosophical train of thought. What was the question again?
Well, no, that's exactly right. The question was just about the importance of framework, what a framework means, how you incorporate in your research so that the folks who are consuming that research can understand things through that lens.
Yeah. So what I like to do from my perspective is I try to go, although I'm technical and my product is called investorcharts.net, I do think it's not really that technical. I think when I'm executing, it is technical because I like to use the DeMark stuff for trying to figure out when things are going to turn. But a lot of it is thinking about the environment that we're in, what kind of macro variables are impacting prices. I do think, treating the markets as a kind of a scientific playground for you to test hypotheses, kind of like the Soros alchemy of finance thing, is kind of the right approach. And that's kind of how I go about it. Is I present ideas.
For people who aren't familiar with that notion, tell us a little bit about what that means.
Well, it means basically that if you have an idea about how the world works, there's no really better place to do it than in the markets, right? Because your immediate feedback mechanism for that is your profit and loss on that. So when you structure a hypothesis about why something might go up based on certain variables, sure, you might get lucky. It might work for a reason that you might have not thought of, or vice versa. But the idea that you're going in there and you're treating the market sort of in a scientific method. You have a hypothesis, you go out and test it. Maybe you have some quantitative stuff like I do, and then you go and apply that, and you're either right or wrong, and that process gets refined over time over what matters. And then you start to see over the years, well, oh, this is not exactly. This is kind of what happened, a few years back. You kind of back test that, see what happened, and of course, the markets are never the same, but there are similarities year over year of different things happening. So my approach is kind of blending my knowledge, my experience over the last, I think I've been doing this like 13 years now, adding some quantitative metrics on top of it, adding some technicals on top of it, and just testing things out. And if it works, I'm screaming, this is working from the top of the hill. And a lot of the time, markets are kind of random sometime, and the technicals matter more, and sometimes it's hard to get a read. So frameworks allow me to postulate hypotheses and test them in real time in the markets.
Jamie, over to you. Let's talk a little bit about this as well. You spent a lot of years over at Bloomberg Intelligence working on research products of various stripes. Talk a little bit about what research means to you, particularly now that we're going out to a broader audience, not just our Real Vision Pro crypto folks, but to people who may be new to thinking about research in a very structured, formalized way. What does research mean to you? Why is it important, particularly for folks out there who may not be habitually or regularly consuming research to help them influence their framework, as Peter just pointed out?
Yeah, well, something that Peter just said, though, is it really resonated with me. Something, along the lines of everyone has to find their place in the market or their approach. There was a saying by a trading psychologist years ago, Van Tharp, who has written many books in the space about trading psychology, and he's definitely one of the authors that's influenced my thinking, is that you need to find a trading system that fits you. And he was thinking of it more from a systematic trading perspective. But in the context of this conversation, you have to find a framework that fits your psychology. And for me, that's really been a process of discovery over years, because it's changed. So, originally I started, at a time where, I was being imprinted with a methodology or a way to think about the markets that didn't fit my psychology. And that was really just a purely fundamental driven approach, and sort of taking the inputs from, esteemed, more senior people in my firm, and sort of distilling that, and it didn't work. And then I sort of found technical analysis, which allowed me to simplify the markets into price signals, and understanding that, that price is really distilling the information that fundamentals is or is not telling you, and every other variable at the same time. So you can make the process a lot more streamlined. And then really trying to remove as much as the emotional biases that I have, that everyone has, unfortunately, as human beings, by building systems or structures which give you signals and don't give you a lot of wriggle room. And that was really my approach. What I mean by that is, I was developing equity systematic strategies over several years. And then I sort of pivoted when I discovered crypto. Originally, it was a technical approach, but then I became fascinated with what was underlying the prices themselves, which was the fundamentals, the thematic story, the secular trends, and the macro. And then that all just sort of folded into a process that I sort of created, a couple of years ago, joining Bloomberg Intelligence, which was understand what's happening, very, very big picture. So what are the secular themes, the secular trends, these structural shifts that you would want to have exposure to? And then look at the variables that move them, backtest those variables, and come up with a streamlined process to buy and sell based on that. And a lot of the time, what that actually means is that, for me at least, that I can't move, I can't act if the technicals aren't there. Because as much as there may be a fundamental thesis for why this asset, this instrument should be higher, if the supply and demand, which is the most critical thing reflected in the price, is telling me otherwise, then it's not the time for me to act on that fundamental signal. So that's the kind of the framework that I use.
Yeah, it's interesting because both of you guys share this sort of orbiting concern with price. Doesn't matter how interesting the fundamentals are. It doesn't matter how interesting the technology is. If the price data doesn't support the thesis, doesn't work. So let's talk a little bit about that, how you use technical analysis in each of your products. And let's talk a little bit specifically about what you guys are doing. Peter, you mentioned investor charts a little bit earlier, now available on the RealVision marketplace. I believe it's realvision.com/Peter, Petr. Talk a little bit about the role that technical analysis plays in this product, and how you structured and why you structured the product the way you did.
It's a really good question, Ash. I think if I wanted the product to be super successful, I'd probably, have some sort of macro deep dive product. And I structured it because I think, like music, you have to do it for yourself. And that's what I did with this product. It's more of a stream of consciousness of how I look at things. And the charts really do mean a lot for what I do. Now, I think Jamie might agree with me that just blind technicals is no way to probably go about the markets. I think you need to have some sort of, even if it's through your experience. I think even successful technicians, they've seen enough to know when trends are going to work, when trends aren't going to work, and there are usually fundamental reasons for that. So even the best quote unquote technicians, I don't really think that they're pure technicians. Nevertheless, price is very important. And what I really like to focus on is actually the DeMark indicators. And the DeMark indicators are a suite of indicators developed by a gentleman named Tom DeMark, and he's a special consultant to some of the biggest hedge funds in the world. And just like I mentioned, I don't really blindly use these DeMark signals for anything.
By the way, let's pull the chart up on the screen so that while you're talking through this, folks can see what you're actually referring to here visually.
Yeah. So the DeMark indicators they're interesting. Basically, they're a counting mechanism that uses the Fibonacci sequence to try to anticipate price reversals. Now, Jamie mentioned, that you really have to find out who you are in the markets. I spent years working at a very famous, family office, doing a lot of mean reversion. It's very, very stressful trying to, buy low and sell high. That's not who I really am. Nevertheless, I did find out how to do it, and now I incorporated the mean reversion aspects on a much smaller time frames, where I try to use the DeMark indicators to try to predict a much more larger trend that's happening. So the DeMark indicators, the main two indicators, it's called sequential, which is the 9 and 13, and combo, which is also a differential of the 9 and 13. I'll just quickly pull up I don't know, S&P 500 daily chart right here just to give a quick example.
Live streaming data here that we're seeing.
Sure. Yep. So these try to predict tops and bottoms, basically. To create a 13, you have to first create a 9 cell setup. So a 9 initiates a 13 count. Eventually, when you get to a 13 count, you are anticipating some kind of price reversal. Now, like I said, I don't blindly use the DeMark indicators, but they are a very important aspect of when I'm trying to get aggressive or not aggressive. So, for example, if what I try to do with these DeMark indicators is I really try to time what they're saying across different asset classes. So for a lot of 2022 on the decline, what really mattered was interest rates. And so if we had some kind of a sell signal on bonds indicating that interest rates were going to go up, and we had the very similar signals indicating that the S&P was going to go down, those are the times where I try to really pay attention, because as soon as we get confirmation from the interest rates markets, which trend a lot more than something like stocks, that's when I'm starting to press the gas pedal. Once we get confirmation, then I'm a little bit more tactical. Then I zoom in, something on the intraday charts, 30-minute chart on, these S&P 500 or whatever I'm trading. That's when it's more trustworthy of these signals. On the higher time frames, like I said, just if you see a 13, it doesn't mean it's a short. But on the shorter time frames, if you have confirmation on the daily, things are rolling over, that's when I really start to get interested in some of these shorter term signals. So I basically, I have a framework that I'm focused on. I go into the technicals. I look at these DeMark indicators on a higher time frame. I decide, is the trend about to end? Are we in a downtrend, wherever we are? And then I zoom into the shorter time frames, and that's where I kind of execute more on I think the lowest kind of time frame that I really go into is probably the 30 or 60 minute kind of ideas to execute those swing trades that I'm really focused on.
A couple of points before we pull Jamie back in. First, talking about research, I'm looking right now on the Real Vision website, Real Vision Academy. We did a course, a 6-lesson class with Tom DeMark, the creator of the DeMark indicators, on Real Vision. If you're interested in learning even more about this, one question for you, Peter, before we pull Jamie, and I'd like to get his answer to this question as well. For folks who, by the way, I'm not a technical analyst, and I'm certainly not a specialist in the DeMark system. But let me ask you this: for folks who may be relatively new to technical indicators, one of the things I think that people often ask is like, why the hell does this stuff work? Right? Like, what is it about technical analysis generally and DeMark indicators more specifically that do in fact work? And the usual answer that I give is that the reason that there's this basis in data for technical indicators is because it's really about human psychology. There are just certain thresholds at which, and these are represented by the Fibonacci sequence, among other key numbers in the series, where people just experience a level of pain and therefore panic, or a level of euphoria and optimism and therefore go in at a 90-degree angle. Talk a little bit about, particularly for people who are watching this for the first time on YouTube, we're trying to understand why technical indicators are so important to so many people, with some of the largest hedge funds in the world, for example, as you mentioned earlier. Why does it matter, Peter?
Yeah, Ash, I think I've heard a very similar answer, and it was, they call it a self-fulfilling prophecy, right? If enough people look at it, then it becomes true. I don't know how true that is for the DeMark indicators. I don't have a good answer for you. I've always been mystified by the invisible hand that seems to time these reversals very interestingly. And I just want to preface that by saying I have back tested them. They're by no means a reliable indicator blindly, right? So I think you have to have, again, some kind of framework or some kind of filtering process to go behind this. But it is very interesting how they just magically seem to work sometimes. I would say more often than not. But I don't think I have a good answer for you. Maybe Jamie might have something more interesting.
Yeah, it's been perplexing for me to some degree, but there's sort of like these, you've got essentially support and resistance, which again is like human psychology. So if you've experienced a loss at a certain price, or there's been a significant pivot point, then that typically turns into resistance or support, depending on the prevailing trend, because there is volume that is anticipating a certain price in order to either break even or make a certain profit or loss, whatever it might be. And the other side of that, the other side of the equation is that humans are emotional, and trends exist because our emotions overshoot and undershoot. So we always have. I mean, even if the role of systems and the role of sort of automated trading play a bigger and bigger part in the financial markets, which is certainly the case, I don't see an end to trends, right? So if you can identify what a trend is by using a technical analysis tool, so I use a lot of moving average crossovers. The systematic traders, the way they think about momentum is they just measure, the period, like a 12-month return or a 6-month return, and they filter assets based on that. But whatever the approach is that you're trying to capture something that seems to be persistent in financial markets, which is the momentum factor, trends. And so technicals are great at just identifying what is trending. And then the other side of it is that as much as technicals give you a signal, they also give you risk management. So if you apply the technical analysis rule set of risk management and position sizing, then you get outsized, or hopefully get outsized returns, right? So, I mean, Paul Tudor Jones, who I worked for a period of time, was like very much a technical trader with a fundamental thesis, but really what he was a master at, and still is the position size. What's the correct amount of risk and how to get out? And that's what I found attractive about technical analysis, was because it gave you the exit rule. Whereas a lot of fundamental analysis is about when you should get in, but not when you should get out. When are you wrong? And that's what price gives you, because the market tells you with instant feedback, is what Peter said, that you're wrong at a certain point.
Yeah, it's fascinating. It sounds like what sort of both of you are saying in some ways is that it isn't sort of a mystical, mathematical kind of something that comes down to us from the heavens. These are about the structures of the human mind. These are about people's thresholds for risk, capacity for looking for upside, looking optimistically versus pessimistically. And that's what you really see in those charts, those buyers and sellers wrestling with that question of fear and greed, the two emotions that obviously are what we always talk about here on global Wall Street and in crypto markets. So guys,
Yeah.
Go ahead.
Yeah, and that's undoubtedly true. Maybe, I did say, some of these things are, mystical in the DeMark sense. I think Jamie articulated it very nicely, that the idea of the most important thing about the technicals, I think, is that they do give you that risk management framework, because I talked a little bit about how intimate trading is and how your upside returns should always be outsized to your downside. And just pure fundamentals, you value a stock based on shares outstanding and its present value to cash flow. That's great. You're indicating 2 times upside, but you buy it and it goes down 20%. What do you do? It's so the idea of having a rules-based system in any game, especially. I always like to make the analogy to backgammon because it's a turn-based game, right? Prices move one way. What are you going to do? You always have to make a move, right? If you gamify it, you realize that you do need to have downside rules. And I'm a huge, follower of the Ed Thorpe Kelly criterion sort of bet sizing methodology. Even if you flip coins 50-50, if you size things the correct way, the math works out for you in the end. And technicals give you that fundamental foundation of having outsized risk reward.
Jamie, I want to pull you back in. We haven't talked yet about your specific research here on Real Vision. Why don't you unpack that a little bit? This is on the Real Vision Pro crypto platform, not on the Real Vision marketplace. Talk a little bit about what that means, where people can get access to it, number one, but also about the nature of the product itself, what pushed you to put it together, and why it is you feel it's important for our viewers and our listeners to look at and understand.
Yeah, so there's a regular cadence of reports out on the Real Vision platform for subscribers. These are usually pretty in-depth reports where I sort of drill into some corner of the market, which has caught my eye. But really what I'm doing is I'm publishing and developing frameworks and data sets and dashboards which will be exposed to the Real Vision community over time. So firstly in the reports and potentially then inside the platform as well. And really what I'm trying to do is, again, it's, to your point, and the reason why we're here today is to talk about a framework, is to ensure that when you're looking at, there's a way for Real Vision subscribers to think about the markets. I mean, Raoul's done such an amazing job and informed me in so many ways about sort of the macro frameworks to use. And so that's very much part of the process, slightly different, but very much, the cornerstone of it. But then there's also the pure technicals and the fundamentals as well. So what you'll see in the reports is, the key, what I call the KPIs for the blockchain asset class, and then the individual assets within that define success for those particular networks. And what I also do with a technical lens is that I look at the overarching trend of the sector, and then I start drilling down into which assets within the sector or the subsector are actually outperforming, because I try to always apply this momentum filter. So the idea is to outperform the market or outperform the benchmark. The benchmark in this case is Bitcoin, or it could be Ethereum. But looking for ways in which you can sort of define ideas based on the fundamentals and when the technicals tell you that the opportunity is nigh. So looking at relative strength in the crypto context.
And I should add to that, these are published on the Real Vision Pro crypto platform. And additionally, Jamie, you and I have conversations about these where we walk folks through the data, walk them through the charts to explain and contextualize everything about that research. By the way, for folks who are relatively new to Real Vision and who are listening to this, as we talk here about Research Week here at Real Vision, where we're talking about these products and these opportunities, I should also point out that we are doing some interesting things that are not directly finance related. For example, Raoul Pell and David Matten's The Exponential Age, where we talk about new technology and the profound changes that technology can bring, not just to financial markets, but to culture, to commerce, and to the world more generally. So all within this framework for research and talking about these issues. Peter, it looks like you have a new chart up on the screen. Did that just switch? What are we looking at there?
I don't believe so. We can talk about charts.
That might just be my Zoom behaving badly as it was earlier.
Yeah, I'm happy to, maybe we'll talk, maybe just real quick. I want to mention one chart, if that's okay, while in the spirit of talking about charts, because this is an interesting one. We were looking at this DeMark signal on Solana at 100 when we had a daily 9 buy setup. Very important I'm just going to give a quick little lesson on the DeMark things. Like I said, trading 9s and 13s blindly, very bad idea. However, when 13s are created, you also have what are called risk levels. And when you break the risk levels to the upside, that is extremely bullish. So the fact that we had a 9 buy signal very recently with a target up to 135, we basically just ticked that today almost, and we rolled off. So on the chart side, I guess just giving a quick little forecast, I do expect a little bit of a near-term pullback, which is what we're getting, I think, in the medium term. But I'm very excited for the summer, though. Everything looks very good.
Hey, listen, talking about charts, Jamie, are you able to share your screen with us?
Yeah, so I'll bring up maybe just some big picture charts here.
Yeah, that'd be great.
All right. Are you able to see that?
I don't see that yet. Maybe it's just a little bit of lag. Okay, looks like they're going to be getting that fixed up in the control room. I'm sure it'll be on the screen in just a second. So just start talking through it, Jamie.
Yeah, so I mean, the chart that I'm showing here is looking at crypto market cap for excluding Bitcoin and Ethereum. Okay, which is now roughly about 650 about 600 billion. So this is just an example of sort of how I look at things, and we're looking at sort of like the market cap or the asset class, excluding these two big assets, but it could work on a single asset like Solana, for example. But what I tend to do is I look at the actual price performance, the absolute price performance of whatever instrument I'm looking at, and then I look at it relative to the benchmark that I may be using. So this chart is 2 panels. So the top chart is the market cap excluding Bitcoin and Ethereum. And you can see that it based during the 2022 period, during that bear market, and then it broke out about 4 or 5 months ago, and we're continuing up to the upside. It hasn't broken the all-time high, but this is an extremely positive or constructive chart. Now, the bottom chart is the actual, it's the same index or group of assets, which is everything excluding Bitcoin and Ethereum. And then I've divided it by Bitcoin because Bitcoin is essentially the benchmark asset. And we can see that although the top chart is trending up, that it is performing rather well. And you've seen like assets within that sector like Solana do extremely well. As a whole, relative to Bitcoin, it is underperforming. So
let me see if I understand this, and we can explain this to folks. That essentially means you're dividing it by the price of Bitcoin. So priced in Bitcoin, altcoins have underperformed, meaning Bitcoin has overperformed in this cycle.
That's correct. Yep. So, I mean, I always try to think of things in the context of like, how do you outperform the benchmark? And so choose whatever benchmark makes sense to you. I think for crypto, Bitcoin is the benchmark, obviously. And for me, I look at, these opportunities relative to whatever the benchmark is doing. So at this point in time, like Bitcoin is the favorite asset, it's outperforming. It's obviously going up on an absolute basis, but it's also going up or outperforming everything else in the space, in aggregate. Now, if I was to bring this chart up with Solana, you would actually see the opposite. Solana is actually not only breaking up to the outside, it's in a strong trend, but it's also outperforming the benchmark asset. So I just use these as sort of a way to sort of gauge like where the relative opportunities lie within the space. Now, the other thing I thought I'd just bring up, maybe Ash, you've got a second, is I've got a chart prepared from my Bloomberg screen here, which caught my eye the other day. So this, hopefully everyone can see, is the DeFi index. So we're looking now at a subsector of the crypto market, which is DeFi protocols. These are the borrow lend protocols, and the marketplaces like Uniswap, Maker, Aave, Compound. And what we actually saw in the last 2 months or so is that this chart has actually started to tick up, so base out. It's been basing really for longer than most of the other sectors within crypto. So the layer 1 blockchain started to move a little bit earlier. They started to go up at sort of middle of last year. But the DeFi protocols have been massive laggards. And this in just the last 2 months has started to change. We saw Uniswap rise, or I think it may have done like 70% over the weekend on the back of this news that they are potentially going to turn on the fee switch and turn the Uni token into an income generating asset rather than a sort of non-income generating governance token, which really doesn't have much sort of value. But now that value accrual is starting to change, and this could completely change the whole DeFi space, because a lot of these assets are actually, from a traditional lens, cash flow, very strong cash flow businesses within the decentralized space. So I think that chart looks interesting. But to go back to sort of what I was saying earlier and put it into context, this chart here is actually the DeFi index divided by ETH. So ETH, I'm using ETH as the benchmark here. And so I could see that actually it really started to outperform, even before the absolute chart did at the start of this year. So again, it's all about putting context around the instruments or the opportunities that you're looking at. So looking at it first on an absolute basis, and then looking at it relative to whatever benchmark you choose.
Well, one of the things that's really fun about having you guys both here on at the same time is that we can cross-pollinate between you guys. First of all, let me just ask this. Any questions, Peter or Jamie, that you'd like to ask the other?
Well, Jamie, maybe you can answer my question. I think the answer is no, but blind technical analysis, yes, no?
I think it has a place within a systematic approach. So, I've had a lot of admiration for the systematic CTA traders over the years. Essentially, they'll refer to themselves as sort of trend followers. So the Wintons of the world that have developed these systematic strategies, but that's a hard strategy to deploy as a retail investor, because what they're doing is they're trading across futures markets, and there's margin and there's a lot of sort of complication that's there in that sort of strategy, but it can be applied on a single asset class level as well. So it's possible, but you have to be extremely systematic, and that requires a lot of backtesting, a lot of technical skills. So it's not for everyone.
Jamie, how about you? Question you'd like to ask Peter? I know we were talking a little bit about DeMark indicators at the top of the show. Anything you'd like to ask Peter?
I'd love to ask Peter, actually, looking at that Solana chart, given that it seems to be on this next wave higher, can you derive anything from DeMark in terms of price targets, or do you just follow the trend and know that it's bullish at this point in time?
It's a really good question. I think a lot of people think about the DeMark indicators as some sort of mean reversion tool. I actually really like to use one of the indicators that they have that's titled propulsion. And propulsion is nothing more than a systematic approach to Fibonacci extensions. And there's different qualifiers around this. So let me pull up the Solana chart just so you can see where that propulsion level happens. So on my screen right here, let me get rid of actually the sequential and combo. And you can see right here that this blue line, that's actually the 23.6% Fibonacci extension from, I believe it's probably one of these lows. And the target is double of that. So this line right here is actually a 47.2% retracement. A lot of actually my approach to, trading the DeMark stuff, this is where I'm really interested, right? Because you had this qualification of a move above this very important level. What really gets me excited is the risk reward on a shorter time frame right in there. So if I zoom into, a 60-minute chart and then enable that sequential and combo indicators, this, when the 13s start to happen here, and remember those risk levels that I talked about earlier? Well, you create a 13 risk level or stop out level right into that 100 area. So when this was holding and you already had a qualified move up to 135 before, that's the risk reward that I'm really interested in. And I apply this kind of systematic thing to to a lot of other asset classes. It's nice that it's universal in that regard, which is kind of rare, I think, in markets finding something that works for a bunch of different markets.
Go ahead, Jamie.
Yeah.
Anything else you wanted to follow up?
Look,
Sorry.
I personally have got to take this journey into DeMark. I've been around enough investors over the years who I respect that have used it, and it's been part of their process. So this is definitely on my list.
Yeah, I hope I can get. I hope I can get your research too. I'm with the crypto stuff. I feel like I'm too technical. You know what I mean? Like I said all this stuff about, I like to have this framework of thinking about ideas, and then with the crypto, I definitely have that in equities and FX and other asset classes. But then when it comes to crypto, I'm like, oh man, I really like the on chain stuff. I had no idea. Like I love my framework for um the Uniswap idea. That was the idea. Well, as soon as crypto pops back up, Uniswap is going to get more interesting. That was literally it. There's no other metrics. So I think having that could definitely be beneficial. I did want to actually just really quickly talk about one chart before we close. I know maybe we're getting too late, but
we got a couple minutes. Go ahead.
Okay,
Jump in.
Jamie mentioned that altcoin to Bitcoin ratio. Actually, what I really like to do on the DeMark stuff is relative performance as well. You could do that on the DeMark charts. And Jamie just mentioned that it has been underperforming, and that's true. I did want to mention that we are actually on the on 12 out of the 13 countdown on a ETH to Bitcoin ratio. So as soon as you get, I believe, so below, so this is how the DeMark rules work. They're all Fibonacci numbers. You can only get a 13 if it's below the 8, because that's the 8th number. I don't know. That's the rules. I don't make them. But when that happens, you should expect some kind of reversal. And again, I'm not advocating for blind trust on technical indicators like this, but it will be interesting if we get one more low this week with ETH underperforming. And if we swoop back up above, 0.055 on this ratio, I think that might be interesting to see if there's going to be any catch-up plays in the altcoin space.
I might just add here that Ash, we talked about this in one of the reports, I think from just before Christmas time, about sort of how to spot the shift from Bitcoin into alts. And I started to see just on my technical indicators that the ratio chart was starting to shift. You can see that in Peter's chart here. So I probably preempted it by sending out a tweet just 2 days ago saying I think the crossover is coming, but maybe it's confirmation bias. I'm loving to hear that Peter's looking at a potential reversal here.
It's like I said, I feel like it, especially when it's around these these are called TDST levels. When you create a 9 or sell, you take the first bar and that becomes support or resistance. So you can see how we kind of bounce around these TDST levels. When a 13 happens right around a TDST level, it's very tricky. It either absolutely collapses or you get a reversal. So I'm in the dark here, Jamie. I don't know.
All right, guys, we've actually covered a great deal of ground here in the last hour or so. I want to give you each an opportunity to give final thoughts, key takeaways to our audience. And by the way, we should probably focus on what we've been talking about here, which is the importance of research and a little bit about your own product, how you see the world, and why you think it's important for people to understand what you do. Let's go over to you, Peter, first.
Yeah. So again, I call it investor charts. It's investorcharts.net. It's available at realvision.com/Peter, Petr. And what I really want to focus on is having sort of, I like to dumb them down. I call them one-dimensional ideas, but I think that's good enough. And if the one-dimensional ideas are very important variables or factors, I then take those ideas and apply them in DeMark indicators and technical indicators and try to formulate some kind of risk reward profile for trading across different asset classes. What I really focus on is top down sort of macro indexes, interest rates, individual stocks, and then crypto. been doing it for a while, and I think it's been helpful to a lot of subscribers. So.
And by the way, I should probably add, since I just saw it on the screen, looks like 20% discount right now on the RealVision platform for that, realvision.com/Peter, Peter. Jamie Coutts, over to you. Close this out, man. The importance of research, how you think about it, and why you feel that research that you're creating is important. What do people need to know?
So the research you'll see at Real Vision that I'm producing is really data-driven. It's data first more than anything. So less around this sort of the narratives in the space, which I think is done extremely well by others. They can talk the narratives much better than I can. I think where my strength lies and where the edge is really looking at the data and bringing that to the surface, and then bringing a framework of risk reward around it to try and identify the opportunities that would where people can sort of outperform. So yeah, I mean, look, my final thoughts for listeners and viewers is that even if you don't necessarily have the time to drill into the underlying fundamentals and get very deep on crypto, I think the best thing for people to think about is just really what's an appropriate position size to have exposure to this exponential asset in a position size which will allow you to sleep at night, because the volatility is extraordinarily high. And so just to make sure that's probably the most sort of common sense, easiest way to sort of think about it. And then hopefully, you can over time customize yourself to some of the technical terms and the granularity that a lot of research products like mine provide.
Jamie, Peter, thank you both so much for joining us.
Thanks for having me.
Thanks, Ash.
And remember, if you're interested in Peter's research, head over to realvision.com/Peter, PETR, to sign up for his premium services with a 20% discount. And if you're interested in Jamie Coutts' research, of course, realvision.com, where you can join Real Vision Pro Crypto. We have another crypto research session tomorrow. Samuel Burke will sit down with Mish Schneider and Holden Milstein. Make sure to tune in at 12 p.m. Eastern Time tomorrow. That's it for today. Thank you for listening. Thank you for watching. Enjoy the rest of your leap day.